Folks, when you start to understand the housing market, when you start to understand your local area, you will very likely uncover something that I think is secret. And that is, what part of your market moves first? It gets hot first and it gets cold first. If you can find that, you can start to see the future. That is why, folks, I talked to Omar Alfaro in the high desert, because for California, the high desert moves first, both up and down. Now we're going to talk to Beth, who is the expert in King County, and see if she has some nuances about King County. Beth, what do you got?
Hi, Mike. Hey, great to be here. So I do notice that there are certain areas that are almost like the canary in the coal mine, but or that connotes a negative thing, but it could be just as equally positive
First
or
mover.
negative. But it's like the
First
first
mover.
thing. It's like you put your finger to the wind and you feel it, like, oh, this is happening over here.
Mm-hmm.
That's an indicator of what's going to branch out to the other areas.
Yeah.
And I have seen, even within certain submarkets, there's different neighborhoods or different areas that do seem to get hit first. And sometimes they do it seasonally too. But I do notice that there's, so for example, I'm in the greater Seattle area. And on the east side, there's this one area called Sammamish that I'm just happen to be noticing in the last couple of few days that houses listings there are getting bidding wars again and going up a decent 10% over list. And I'm seeing that regularly. If it happens once or twice, it's an anomaly. But if it happens where it's almost every listing, then we see something as bigger is going on. But I notice when you go outside that area, I'm not quite seeing that yet. But it's giving me an indicator as an agent when I'm getting ready to put listings on the market that, okay, I think our strategy needs to shift a little more toward giving the potential for multiple offers.
Okay.
But we can also just as easily see in Sammamish, I remember last summer. So Sammamish was one of those areas that in when was it? It was about the first half of 2022. That's when prices there spiked the most. They were up over, the list price to sale price was over about a 30% delta. So it was like 130% of list price to sale price for a little while there.
That would be a hot market.
Yes. So hot, it was almost impossible to navigate if you're a buyer. The thing we've talked in the past about some of the just insane things people had to do to get offers accepted during that time. And then when the rates crept up, it slammed on the brakes faster than anywhere else. It's like all of a sudden nobody was buying there. The only offers coming in were low balls, and people were offering hundreds of $1,000s under your list price. First, they wait for it to come down a little bit, and we had to do price drops that were 6-figure price drops. Agents were doing that for a while there. So this is a place where, maybe it was topped out around $1.6 million, $1.7 million, like typical list price.
Okay.
For this is an area where almost everyone seems to be in some way related to the software industry. So that's what that market is. And the brakes were slammed, price drops, 6-figure price drops, and then the offers coming in were 6-figure more under that. It corrected really fast.
Right. Okay.
And I have to say, hats off to those buyers out there that saw their opportunity. They're like, we're going to get a deal if we're buying right now.
Yeah,
and
right. That
did.
Disrespectful offer. Yeah, exactly.
Yeah. So, and they did. But now inventory got so low that and people got accustomed, more acclimated to the interest rate environment that we're in today.
And also, let's not forget that the stock market, the S&P, is closer to a high than the bottom.
Yeah,
a lot of people likely are using stock or RSUs or options or whatever handcuffs they have from their day job, and they're like, okay, my stock bounced back 50%. Let's sell now.
They feel more comfortable. There was a lot of talk about tech layoffs, and a lot of layoffs did happen for a while there. I'm not hearing so much about that now. I'm hearing some, but not a lot. So I think that a lot of people maybe feel more secure in their employment and their stock portfolios, and they want to buy a house.
Yeah.
And there's nothing for sale. So they see something comes up, they're jumping in and going all out. However, you go a few miles away in an area that has a lot of the same types of buyers, but it's just a little more away from that epicenter. It's a lot more miss.
What's the price point in the other area? Is it below the 1.6? I'm guessing.
Yeah. So it's probably closer to about 1.2 or so in those other areas.
Oh, Okay. So again, you've got this little hot spot where
Hmm.
all the dual income, engineering types are kind of moving. They drive Teslas, and we all know the types. And then you go out 20 minutes away, not as hot.
Not as hot, but it's a little bit of a different buyer. It's the people who want a little more elbow room, is a little more of a rural feel.
Okay.
It's still easily commutable to Amazon and all those areas. So it's the same buyers, but it's the people that want to be a little
Yeah.
more out from the
Hustle and
the
bustle.
small lots and the subdivisions. They want a little more breathing room and mountain views and things like that.
Okay.
So,
Okay.
in those areas, I'm starting, but the inventory in the surrounding areas is so minuscule that's
Hmm.
hard to get enough data points to really see. So,
So it's so I think what you're highlighting for me is exactly what I hope people start to understand. So you get this little hot pocket that gets hot or cold, it draws or pushes people to the other areas, right? So when this market gets hot, people get priced out. They're in a buying mood, so they go a little
yeah,
farther away. They get a
yeah.
bit bigger bang for the buck. But when this
Hmm.
market gets cold, it's drawing people in, and they're writing lowball offers, and they're like taking their swings. So it's,
Exactly. Yeah,
yeah,
I call it the
makes sense.
epicenter and stuff. So it's like when people get, so for us, like say the true epicenter is probably Bellevue, which is right across the
Mhm.
Lake Washington from Seattle. And so we got that epicenter. Seattle's its own epicenter, and then there's Bellevue is the epicenter. This other area Spanish I'm talking about is one rung out from that.
Okay.
And then these other areas are like 2, 3 rungs out, it's, and you're all right that when it contracts, it sucks people in and then pushes them out. So we've
Yeah.
been seeing that for a long time, but I've been seeing it a little more emphasis on that lately because we've seen these a little more extremes in the hot and the cold. It's a low inventory that's pushing that.
Yeah.
Um, and then we see totally different things. Like if we look at the city of Seattle, I was noticing in July's stats that their price year over year median sales price was down 5.6.
Hmm.
But then in other areas, like what I'm talking about, like we were up 5.6 because we already had that hit. We got hit so
Right.
hard. We were down, way down for several months there, where Seattle was a little more, they didn't have the spikes and the drops like we had. It wasn't as sensitive to
Right. Noticeable. Yeah.
the, the
It's
month to
it's
month
the
shifts.
housing market has always been location specific. I think what we're experiencing now is not only that, but price points, right? This is something I've been talking about for a while. Lance Lambert from Fortune's now picked up on. And, Seattle is akin to San Jose a lot. It's a tech heavy area. And I don't know Seattle off the top of my head, but I know San Jose's because the numbers are so shocking. The luxury market in San Jose, California, as of last month, is down 10% in price. That's almost a correction, or it is a correction at 10%. The low end, the first time home buyer, record high, never been higher. How can both those be true? Well, it can be true at 7.5% interest rate with no active listings. That's how that happens.
Yeah, and the interesting thing that I saw, Mike, was when I was looking at our price, I put it into different quarters, like the bottom and up to 1 million, and then 1 million to 1.5, 1.5 to 1.2 to start 2, and then 2 million and up. And the interesting thing I saw, which was a counterintuitive to what I was expecting to find, was
Mhm.
that the over 2 million, it was 99% list to sale price, which shocked me.
Interesting.
And I saw at the bottom tier rung, it was about 101. So there's not a lot of difference right now. And I think it's
I
because,
would be very interested to your earlier point. Again, this is one gut opinion, pure guess. My gut, it says over 2 million bucks are only selling after they've had a first price drop, which might
yeah,
be
so I could tell
artificially.
you, so like original, I happen to have my data
Oh,
here.
look at you.
Yeah. And I try not to read off sheets when we're filming, we're taping, but it's 2,681,000 was the original, and then 2,655 was the sale price, and only
Oh,
20
well,
days on
no, I'm
market.
wrong.
Now, granted, this was not the whole all of King County. I was looking more at East Side. So if I
Okay.
looked at
Your
all of King
area.
County, it's going to be a little more all over the place, probably.
Yeah. You're
But
looking at your
that's
backyard. That makes
interesting
sense.
because it wasn't showing that a little or a few months ago. So
No,
what
it
I'm
wasn't.
seeing, Mike, is like I think this is another example of this is the area that kind of gets a little bit of injection of juice
Yeah.
back into the market a little sooner
Well, let me ask you
than
one
some of the
follow-up
other
question
areas.
because I like data. So first off, my first guess was wrong. Let's be clear on that. How about transaction volume? Is transaction artificially low above 2 million and thus it's skewed, or are transactions relatively consistent to past months or quarters?
Well, I'd have to dig into the more specific because I only have just a printout
Yeah,
sheet here,
that's
but
fine.
it does show the inventory is low. It's definitely low.
Yeah, because what I'm thinking is, and again, these are just numbers for ratios. Let's say over the last 90 day, or you sell 52 million plus homes a quarter. I'm just making this up. Maybe last quarter you sold 13, and thus the list price
Yeah.
to sale price is
Yeah.
kind of sticking. I don't
And I
know.
only look back 30 days on this. So
Okay.
it's just the last 30 days, which was very slow. But what I
Yeah.
did see also was, I'm like, what about these ones that are 3-4 million or
Yeah.
more, but a lot of those were lakefront or something like that. And people
They had
just
like the
snatch
it
those up
factor.
still.
Yeah.
Yeah. So it was not what I was expecting to
Yeah.
see, but is that an
Did you
indicator of something that's going to persist, that market is going to rebound? Remains to be seen.
I don't
But I
know,
think
but we're going to talk every week. That's for sure.
I know. Yeah, I have to say, like, we saw our big hit a year ago. So that's when everything came down extremely fast.
Yeah.
So it's interesting to see where we come from here. It feels almost like it's finding it's kind of a stasis where it's gonna
Yeah. I think that's
probably
exact.
stay this kind of slowish, but slowish in number of listings and transactions, but prices are gonna be sticky.
I wish somebody would have called that transactions down 40%,
Yeah.
listings record low, and sticky prices.
Yeah.
Because that's, I
I
think
want to give
that's
people some hope. I know. I think I heard that a few times.
a few
Yes.
times. Yeah.
A few times, but I want to tell people there are still, if you know how to read between the lines and see things and watch your buy box every day, you will see the anomalies in there. I could point
Oh,
to a
yeah.
few now, or like, oh, here's some ones that if I was in the buying mood that I would consider because they
Hmm.
have X, Y, and Z that's
Yeah.
bucking the trend of what we're seeing in these other, so it's important to take a look at the market overall and your sub markets, but also look, you need to be able to spot the anomalies in each property to find the
Yeah.
opportunity. It's going to require that deep level of analysis and observation and just turning over all those stones.
Focus and daily discipline. It's the only
Mhm.
way to make it work. It's,
Yeah.
I think that's going to be the key for the next couple of years. The opportunities will be there. Motivated sellers do pop up. The anomalies do happen, but you got to look every day. These
Yeah.
people that tell me I'm going to look on Saturday, I'm like, don't even bother.
You'll
Don't
miss
even
it. If
bother.
there was a good one, somebody's going to find it day one.
Yeah.
And looking for the ones again where people just they're not able, the seller's not able to do the work to shine it up and do the prep, and they just can't deal with it. And if you can come in there and solve their problem. So this might be a whole nother video. So I'll just
Okay.
tease maybe another video, but like
All right.
when people tell me they're all upset because I offered more and the seller ended up taking less, and therefore somebody did something unethical, and I can't believe my offer wasn't accepted because I offered more. I can
You know
tell
what?
you, as somebody who works with a lot of sellers and observes many, many, many hundreds of offers, it's not unusual at all for a seller to take the lower offer over the higher one if the terms are more appealing to that seller.
You know what, folks? We will make that
Um,
video number 3 and dig into that deeper. But before we do, Beth, somebody wanted to buy or sell in King County or get a referral to another amazing agent, how would they do that?
Yeah, they can find me at bethtraversogroup.com or find me on Facebook or Instagram. Pretty easy to track me down out there.
There you go. Thank you so much.
Thanks.